Welcome. I'm Professor Wozniak, and we're going to cover the basics of personal finance. Generally, finance has two areas: corporate finance and personal finance. There's a little bit of overlap where we study the time value of money and the various equations and the five variables of it in both courses. But personal finance branches off in a different way than that of corporate finance. Just for perspective, corporate finance looks at things such as valuation, financial markets and institutions, international finance, investments, which also overlaps with personal finance. Personal finance, though, focuses, obviously, investments is a component of it, insurance, also called risk management or risk transference. Personal finance also includes the study of real estate, budgeting, which also relates to cash flow management, taxation, estate planning, wills and trusts, and other instruments that are essential. And there is a comprehensive financial planning aspect of it, and brief coverage of professional certifications in personal finance, which includes certified financial planner, and I do have one of those degrees that is board recognized by the CFP board. And there's also chartered financial consultant, or CHFC. Additionally, some folks that are certified public accountants will also go and then earn another credential called PFS, which stands for Personal Finance Specialist, because an accountant or CPA, by their accounting education, is not educated in financial planning. All right, so where do we go here? What are some of the values of studying budgeting? Well, if you don't have a plan to get where you want to go, any road will get you there. And let me guess, or let me tell you, it's not going to be what you think. Okay, so planning is important. Proper insurance is important because, again, it is risk transference. No insurance is going to cover you at 100% for specific reasons, such as what's called adverse selection. But you set deductibles, for example, for the amount of money that you can afford to pay in the event that a peril happens, such as a collision, a death in a family, when there's life insurance, which is technically death insurance, but that's not as sexy to sell. All right. Investments are very important because economists make a delineation between saving and investments, marginal propensities to save, marginal propensities to consume. So from their perspective, there's two things you can do with a dollar or unit of currency. Finance people take the money that you might save and divide it into two separate categories: savings and investments. They each have a very distinct purpose. Savings, especially emergency savings, allows you to accommodate emergencies that are beyond your normal income in a given month or even 6 months and not have extraordinary financial stress. Investments are designed to keep your purchasing power ahead of inflation, and if it's in a taxable account, ahead of inflation after paying taxes, with a risk level that is suitable for you, such that when there are swoons in the market, you aren't calling your financial advisor in a panic because your account went down by 20 or 30%. That would suggest incorrect matching of risk tolerance with your portfolio. The other basic thing in finance, and this overlaps with both kinds, there is no free lunch. None at all. Everything costs you. So if you want extra return, extra reward, you have to pay for it with greater levels of risk. And most financial advisors don't want to have complaints filed against them. You usually can't sue them, but to go to arbitration. So they're going to tend to want to put you in more conservative investments to avoid particular problems, which means that you get less reward. Now comes the aspect of learning more on your own about investment decisions. There are two not for profit organizations in the United States. One is the American Association of Individual Investors, or AAII. It teaches across the broad scope. And the other not for profit organization is Better Investing, which its principal teachings are how to analyze high quality, conservative growth stocks. Now, one of the advantages of learning about individual investments yourself is that it is not rocket science. You can learn how to make a good deal of stock investment decisions that should hopefully beat the S&P 500 index. Because if you can't, it's better to put your money in an index fund, and it's easier to do than ever before, and go to the beach, for example, if you like that. I look forward to seeing you enroll in one of my personal finance courses at University of North Texas. It is personal finance, Finance 3770. And at North Central Texas College, it's financial literacy, BUSG 1304. Thank you.